If we can't get that turned around and keep beef on an upward trajectory, or at least sustaining in that 310 plus mark in the choice, then we could have more trouble on our hands.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. Always a treat to have you with us. Thank you very much. And I want to remind you to make sure you like these videos, subscribe to the videos when you click on that bell icon down below, and share these videos with others as well. Thanks to you, we continue to keep growing, one of the fastest growing ag podcasts out there. Well, today I'm going to bring in Relph of Comstock Investments. We're going to take a look at how we wrapped up the week. And Eric, what an adventurous week we just put under our belt. What do you take away from all the market movement that you saw in all directions here this past week?
It was hard to come away with firm takeaways. The only thing I can say is that traders are certainly anticipating a bearish report on Monday from the USDA with regards to row crops. Definitely looking for slight decreases in acreage, I think, because they are incorporating that FSA data in this August report for the first time ever. So there is a little bit of a bullish tilt from that angle, but it doesn't offset the bearish undertone from the anticipation of increased yield for both corn and beans. Just based on crop condition ratings at this point, moisture levels have been good. We haven't been too hot in the heart of the Corn Belt, the I states in particular. And that's what draws the attention. And that's where we're at. And right now, the soybeans are being made, and this has just been a non-threatening weather month so far. And it looks like the forecast getting closer to the end of the month, still pretty unthreatening. And so the beans have every chance in the world of doing well. But with the planting season we went through, I have a hard time believing that we're going to be able to live up to expectations on the corn yield side of things in a lot of these areas. And, you know, our clientele is spread out from North Dakota all the way down to Texas and across the belt. And I can point to areas where there's some significant problems, and especially during that planting season, and discolored corn, stuff that's not going to be developed enough for these cool temperatures to really fill the ears like most are anticipating we'll see. Now, Illinois, a very different story. Everything there looks just absolutely as good as you could expect and hope for. And there are going to be a lot of people sitting on bumper crops this year. So it's a tale of two halves. And right now, the trade is just looking at what the USDA is going to print, and they're looking for increases in yield. And that's what's drawing all the attention.
It seems kind of like a bookend here, doesn't it? Where the center of the country is about ideal.
Yeah.
And either end of the Midwest or the Corn Belt, if you go to the Atlantic coast, they haven't had the greatest year either. I mean, they had a long dry stretch there. And I did an interview just yesterday on our podcast about the far western Corn Belt. Not much in the dryland acres out there. Yeah, they have irrigation, but there's a lot of dryland corn that may not amount to too much if they don't get rain pretty quick.
Yeah, I mean, they'll get some tonnage off of that ground, but they're not going to get any grain. In a lot of cases, I'm not going to say that all the dryland corn is a complete loss from a grain standpoint, but yeah, it's bad in a lot of places, and for different reasons in different areas. You know, there's couple counties in Minnesota that when you combine the two counties, you're talking 60,000 acres of prevent plant just in two counties. And so there's stories out there. It's just a matter of how much better is the good going to be.
Well, of course, earlier this week, I had a report from Louisiana. They've already been harvesting corn for 2 weeks. I'm curious. I'm glad I had a chance to have you on before the end of the week. Where you are, you're up in Northwest Iowa, and that's where you had so much flooding this spring.
Yeah.
So a lot of the crop was way behind, or they had to replant several times. So I'm curious what the maturity is on the crops where you are right now. Are they going to be able to catch up or not?
Still remains to be seen. I mean, we're going to be 48 degrees tonight, and we have a lot of plants that don't have an ear on them yet. And so it's, you know, when I say there's stories, there are some serious stories out here. I can take you to numerous soybean fields that are not even a foot tall right now. When we say we're behind, it's something else. I mean, this has been a mess of a planting season that is going to lead us into, if we continue to not get warmer temperatures, going to lead us into some frost potential problems at the end of the season. So, you know, again, your bookends, well, everything in the middle is great, but you got to have a good start and you got to have a good finish. And if you don't have both of those, then your yield's just not going to be there.
Well, that would seem to confirm my interview with Scott Irwin that I had about a month ago. and he was talking about that his main concern was the northwestern corn belt, that it won't come across the finish line fast enough before we get our first killing freeze this year. He said it would almost have to be a late freeze.
Yeah, yeah. I think you're going to have a late freeze, even if you're normal. Keeping in mind too, I mean, they've changed the corn. There's not a lot of 103, 105 day corn anymore. There's a lot of 109, and even a lot of people kicking out to 112, 115 day. This growing season, because of when it was planted, the seed availability was somewhat limited, and you had kind of a mixed vision on what's going to be the best decision. So of course everybody kind of does a variety, because maybe you'll be half right, half wrong, but on that full season stuff that was planted kind of late, it could really have problems.
Well, you mentioned as we started this recording that we had made some new lows for the move in corn and soybeans. Explain what you noticed on the chart.
I had been hoping, and it was nothing more than hope, that maybe we would actually hold 395 December corn and 1013 soybeans. Of course, that was before yesterday's trade. Yesterday, we did make a new low in the beans, but we had still held the 395 in the December corn. And kind of get this up in the center here. So the 395 was posted on the 1st. And we held above that all the way through yesterday. And then today we made a new low at 393.5, and then closed right back at 395. So the fact that we closed back at 395 doesn't necessarily mean a whole lot, especially as we're coming into a Sunday night and Monday, where we're going to be in report prep mode. Anything can happen. But it wasn't a technical washout by any stretch of the imagination. It just went a little lower than I would have liked to have seen on the December corn, and did make a new contract low and a new low for the move. On the November beans, although not a new contract low, well, actually I say that, and I have not looked back at what that low was. Yeah, not a new contract low. The contract low is 964.25. So got down to 1001.25 at the low, barely closed off with that low at 1002.5. And again, that was a new low for the move and a new low close, and doesn't look real pretty on the chart at all. And you were down 4 out of 5 days this week. And again, this is all report prep. This is all anticipation of yield increases for both corn and beans. But today was kind of interesting, because you had daily flash sales of 344,000 tons of beans and another 100,000 tons of meal, and beans are down over a nickel and meal is down $5 a ton. And so kind of counterintuitive when you look at it from that angle.
Well, yeah, I mean, if you look at it from a fundamental point of view, if that's the case, then the attitudes really have to change before we can turn it around.
Yeah, this is just, I don't know that I recall coming into a report where everyone was so heavy on the same side of the boat. And this one is obviously the bearish side.
And that's what really gets my attention, that usually if that's the case, the opportunity for a surprise would be the other way, right?
Yeah, especially when you're selling off leading into it. If you have bearish expectations across the board, and every analyst you listen to, read, talk to, that is their expectation. I just don't see how we could be supportive coming off of this report. When you have that attitude coming in and a market that's selling into it, typically it leaves some potential for an upside surprise.
Could it be that the funds are looking at this, the fund managers are looking at this, saying that we have earned about all we're going to earn out of this market, and time to take some money off the table and get out of there?
Well, you would hope. Unfortunately, as long as we keep making lows, they keep making money. And as long as they keep making money, they'll stick with their position. So they'll be a little bit proactive when that time comes, but so far they've not been given any reason to be.
I guess the thing that caught my attention was that it seems like the rate of descent is slowing down.
Yeah, for sure. Yeah, we are seeing that. And obviously, in order to stop, you got to slow down first. So yeah, there's arguments, right? They could be slowing, getting ready to stop going lower before they then could go higher. They typically won't be neutral, the market, but even if they would just cut half of their short positions in the overall grains right now, that would be a nice little bump.
Well, how does the economy and the stock market all play into this? I know about a week ago, it was a tremendous drag on everything, where the equity markets really fell off a cliff. but they've been chopping around, and everybody seems very indecisive about what the interest rates are going to do and what the dollar is going to do.
Yeah, and that makes a difference too, because you have to also think of it as a foreign buyer. You know what's going on. You're keeping tabs on what the rhetoric is surrounding the dollar and what the moves have been, and you're watching that chart very closely because it obviously directly impacts your bottom line if you're purchasing U.S. exportable products. And so maybe that's why, I mean, we've been hearing all week that China's been shopping really heavy for beans. And then today we see 344,000 tons. Only a portion of that was confirmed to China. The rest of it was confirmed to unknown destinations, but that usually is China as well. And so if they have done all this buying, they could be front running either one of two things. Either they're expecting the dollar to move higher, or they're expecting the beans to move higher. And either is possible, but in this case, where you've got potential rate cuts coming, I got to think it's the beans to move higher and the dollar to maybe be stable to slightly lower.
Eric, tell me about the wheat market. Was there anything you could take away from the way the wheat closed out the week? It seems like maybe it is trying to carve out a bottom. I can't tell.
Yeah, I think it probably is trying to carve out a bottom, and I think that's mainly driven by the global story, particularly coming out of the EU. Their official estimates now for EU total wheat production is running about 7 to 9 million metric tons below the last print we saw from the USDA. So USDA either needs to come down, or maybe the EU is overshooting it a little bit and they need to come up. But I would think the USDA probably needs to come down a little bit. And I think that's bolstering prices as that situation would warrant, because we do have French estimates now have their lowest production estimate. They're not done harvesting, but their lowest production level estimated since 1986. Germany's having their own set of issues. We know about the problems in the Black Sea regions. Argentina is having their own problems. So yeah, there's definitely a global production story that would be supportive of the wheat, but we just can't seem to get legs under it. Carving out a bottom would be nice, but motoring out of here would be better.
One thing that lurks in the back of my mind, Eric, is the fact that, in about a month, they're going to be planting the new crop of wheat already.
Yeah.
And I'm over here looking at a wheat chart. It doesn't offer a whole lot of incentive to put in a lot of acres, does it?
No, I would say actually your row crops are probably offering you more incentive to plant wheat than the wheat market is. This is just, I mean, what are you going to do if you're out in that area? You're going to have to go back to your typical rotation, and you're going to have to go back to fallow. And I don't know. It's definitely going to change the dynamics for a while here if we don't reduce some of these inputs or increase some of these market values.
Well, let's talk about a silver lining here, and let's talk about livestock. At least they ended on a good note on cattle.
Cattle did, yeah.
A, how did they do that? And B, can they do more of that?
Well, I would like to think that there's more after the meltdown that we've seen. I'm going to pull up both the feeder and live cattle chart here and take a peek, because the sell-off is just extraordinary when you look at it from a chart standpoint. We see the movements on a day-to-day basis, but I think some people lose sight of what that visual looks like. And I'm not even going to work on the August because it's not overly relevant. But just what is that? 1, 2, 3, 4, 5, 6, 7 sessions ago, we started the day out at 257 in the September feeders. We closed today after a $4 move higher at 241.60. So, you're talking about $16 after a $4 bounce. So $20 move to the downside. And then you take back 4 of that by the close today. I don't know if that was just profit taking, because you got to keep in mind when we closed out on Friday, we closed at 248.15. So those shorts had a lot of profit sitting there. And today may have just been a one-day wonder on some profit taking to end the week. I'd like to think not, but that could be the case. Live cattle doesn't look a whole lot different going to the October contract. A nicer finish where you finish up above the whole week's worth of highs, but you're still right back at the 100-day moving average. And you're still, high of 189, and we finish at 181. You're still $8 below that high after a $3 bounce today. So it's not a great look, but it's definitely better than what we were staring at this morning. And the cash trade has been the big deal this week. I thought for certain, I'd have bet you anything that we had the market set firm on Wednesday at 187 in the south, 193 in the north, and 305 dressed. And then Thursday, we sell a little bit lower in every category except the Nebraska live market. It held up there at that 193, but Iowa, we had sold 193 leading up through Wednesday. And then on Thursday, we had some as low as 189, although it was just a few loads. And then in the Southern Plains, you had Kansas selling at 187, which was $1 lower than the prior week. And then Texas comes in and sells at 185 and 186. So if we can't get a cash turnaround, and the same thing pretty much holds true of the feeders, if we can't get that turned around and keep beef on an upward trajectory, or at least sustaining in that 310 plus mark in the choice, then we could have more trouble on our hands.
Now, how is this wholesale trade compared to where you thought it may be when you were thinking what it would do in relation to the futures market here about a week ago? Has it improved against the futures? Has it come together? What do you think is happening here?
Yeah, it's pretty well aligned. I mean, I was looking at the futures at the levels that they were at, and I was looking at Southern Plains cash, and I'm thinking something's got to give here. I was hoping that obviously cash would improve and all would be well, but unfortunately that wasn't how it went down. And now you're pretty well in line with where you ought to be with regards to the August live cattle quote and the Southern Plains cash trade when you account for basis within that differential. So you're pretty close to where you need to be, and we still have 3 full weeks of August left.
Well, what do you think about this hog market? Are you a fan yet or not?
No. Till we get this supply we gotta weed through some of the supply, and I don't know what that looks like for hog producers and hog growers. And I feel bad for them. At least they're in a better situation than they were, but all in all, this is typically not a great time for hogs. Fourth quarter is going to be tough on us, although we're not to the fourth quarter yet. Seasonally, this begins kind of a rough patch.
Okay. Well, I appreciate you taking time to visit with us here and analyze what happened during the course of the week. Great stuff as always. And I'd encourage anybody, if they have questions, go ahead and reach out and give Eric a call sometime and kind of chew over the markets and see what you think. Of course, keep in mind, we have the WASDE report coming out next week. That'll be on Monday at noon Eastern time, 11 o'clock Central time. And of course, we'll be talking about it after that takes place. Thanks, Eric. You have a good weekend. Eric Relph of Comstock Investments. That'll do it for this episode. For producer Brianne Hendrickson, I'm Marlin Bohling, and we'll catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget you can also find us on Facebook and TikTok as well. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.